Will Bitcoin make a new all-time high this week? In today's video, we're going to be going over exactly what you need to be paying attention to moving into the upcoming monthly candle close. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing Bitcoin from a short-term and a macro perspective, going over the key levels that you need to be paying attention to on the charts, what we expect to occur next, and how the price action is developing on the macro, moving into one of the most important monthly candle closes we have seen for years. So we have a lot to get into today, guys, but before we do, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us over on Telegram. We post daily updates with charts, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in joining our trading channel, we post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, and exclusive analysis. Not only will you get access to all of our trading signals, you'll also get access to our group chats, our general chat, our trading chart and education chat, our help, our news, our trade setup, and our daily video chat. If you're interested in access to all of that, contact me in the pinned comment for more information. You can contact me by clicking my link over here or clicking the links over here for more information. Let's go ahead, guys, and dive on in. So in the last 24 hours, we really haven't seen all that much price action for Bitcoin. Bitcoin is still sitting comfortably above the $69,000 major high time frame level of support, which happens to be the 2021 all-time high. We've seen a fair amount of volatility, however, in the last 24 hours, with a sharp move to close to 72,000, followed by a steep correction back to that $69,000 level. Like we mentioned at the start, we're going to be discussing in extensive detail exactly what is happening here on the price action chart, what you should be paying attention to, and what we expect to develop next. We'll also go over the total cryptocurrency market cap and total altcoin market cap, the macro charts, and that monthly candle close. So let's go ahead and get stuck in, starting on the market data. How are we currently looking for the 24-hour period? 24-hour volume is sitting at 220 billion. This is up 15.99% in the last 24 hours. With that increase in volume, we have seen an increase in liquidation, sitting at 239 million, up 36.83% in the 24-hour period. Of the 239 million, 166 million have come from long positions, and 73 million have come from short positions, as we've been flushing out a lot of these late longs, these high leverage longs that entered into the market above that 69k level, or even entered slightly higher. We saw us move upwards, resulting in a lot of new entrants coming in, high leverage positions, and now we have seen that flush out. So again, healthy flushing out of late leverage. We generally do see that. Moving over to the DXY again is still in a overall uptrend on the short term. We are expecting to come up to retest this area of resistance, this area of our prior high at around about 105. Of course, if we break down from this overall short-term uptrend prior to that, we would expect a continuation back to our lows. At the moment, we are expecting a continuation higher, a rejection, and then continuation to lows. Moving over to the S&P 500, looking overall again quite bullish. Very, very strong on the high time frame, and the strength will definitely remain for the S&P 500, provided we remain above, most importantly, the $5,000 level, and secondly, importantly, the 5,100 trigger point. A breakdown of 5,100 will result in a short-term correction back down to 5,000, and if only we lose 5,000, would we see a higher time frame correction to our prior support. Until then, we're going to continue to ladder up, creating new levels of support along the way in a overall uptrend, looking very, very strong. The same goes for the Dow Jones. We are very much in price discovery, breaking back over that $40,000 resistance level. Exactly the same thing goes as only if we lose that 37,600 level to 38,000 level, where we expect a higher time frame correction filling that gap on the VRPV back down to our prior all-time highs. Until then, provided we are able to remain above that 39,000 and specifically the 38,000, we are expecting continuations higher and establishment of new supports along the way into price discovery. Overall, the markets are looking strong. Enough about that, guys. Let's go ahead and dive over to Bitcoin before we do a quick word from Bitget and BingX. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and get stuck into it. So starting on Bitcoin's price action chart, we'll take a look at our higher time frame. And as we can see, within the last 2 weeks, we have seen some massive turbulence in the price action, a huge swing upwards followed by a massive swing toward the downside, followed by the price pushing back up from those 60k lows back over 70,000, currently sitting above the 69k level. And this is one of the most important moments in Bitcoin's price action since November 2020, as November 2020 was the last time Bitcoin retested the possible breakout of the prior all-time high. If we're looking at this particular candle over here, that was the last time in Bitcoin's history that we retested and broke through on the monthly chart of the prior all-time high. We'll come back and discuss that in today's video. And of course, with that monthly candle close, we have the weekly candle close. They line up on the same day. So the weekly and the monthly have utmost significance at the moment, and that is happening in 4 days' time. So it is paramount that Bitcoin is able to remain and close above 69,000 in 4 days on this weekly chart, resulting in a close above that prior all-time high, which historically has initiated the parabolic phase of the 4-year cycle, the parabolic phase of the current bull run. We have been in a bull run technically since we broke above 32,000, but this will be the entrance into the parabolic phase, and we'll explain that in today's video as well. So how can we close above, and will we close above are two very important questions, and to answer that we need to dive very deep into the short-term price action. So in today's video we're starting off there. Let's get into it. So the short-term price action, the most important level on this chart is going to be the $60,000 horizontal support and the overall 2-month-long diagonal uptrend. These are the two most important levels. Let's start with the uptrend. The diagonal uptrend is represented by, of course, this uptrending diagonal trend line, which is a representation of the trend or the trajectory of price action, which we have been moving in since the start of February 2024, so around about 2 months now. We have got our retest number 1 in early Feb, retest number 2 in late Feb, and our third retest confirming this trend again in mid-March. So we do have 3 points of retests, all spaced out very evenly along this uptrend, again respecting the trend, indicating this is the overall uptrend we have been traveling in. If we do remain above this level, we expect the price action to continue at a minimum, okay? We can go parabolic from this level at a minimum along this trajectory. So provided this trend remains intact, we would expect the price action to remain above this trend line and continue along that trajectory. Again, if we do remain above this trend line, inevitably we will be breaking above these highs as we are in a uptrend, right? We're moving in an uptrend against the horizontal resistance. If, however, we lose this trend line, this will result in a correction back down to retest that 60,000 major horizontal support level. And this is going to be the most important level on the chart. If we look at the trend from a bullish to bearish perspective, we are bullish above on the short term, this trend line. We are bearish below on the short term, this trend line. If we look at the higher time frame trend, we are bullish while we remain above the horizontal support at 60, and we are bearish if we drop below the horizontal support at 60. So what does that tell us? We expect a continuation provided this trend line holds. If the trend line breaks, we expect a short-term correction towards 60, where then we're going to determine a bounce, or if we do break down, we'd enter a higher time frame correction. Again, guys, if we look at the higher time frame chart, the 60k level has been retested now numerous times in the higher time frame, and we can see that a breakdown of this level could very well result in a correction to our next area of high time frame support at 52,000. However, this is a statistical improbability, provided we remain above our uptrend and our horizontal support. The most likely scenario is still going to be a continuation upwards, provided these areas are able to hold. So let's dive into the price action a little bit more. If we break down the price action again on the short-term chart, we have got 3 specific zones. Actually, no, we've got 4 specific zones I want to show you. We have got zone number 1, which is going to be between these 2 horizontal levels. We've got zone number 2, zone number 3, zone number 4, and zone number 5. The zone number 1 is our neutral zone. The neutral zone is the distance between the all-time high of the prior cycle and the weekly high of the prior cycle. This is the neutral zone. This is the decision zone. This is the consolidation zone. This is the area of indecision on the price action. A lot of chop. Then we have got number 2, which is going to be our short-term bullish zone. This is above 69,000. You can see we are in that zone currently. We have got number 3, which is our short-term bearish zone. And then we have got number 4, which is our higher time frame bearish zone, and number 5, which is our higher time frame bullish zone. So if we do see an entrance again into zone number 4, we expect a higher time frame correction to potentially 58 or 52. If we get into zone number 5, we expect a macro continuation, which will potentially result in that parabolic phase in the cycle. Provided we remain in zone number 2, we are expecting a continuation up to the zone number 5 resistance. If we break back into the neutral zone, and again, it is going to be determining whether or not we hold this uptrend and enter a short-term downtrend, or we are able to get back above the 69k level. So those are the key levels we are watching on the short term at the moment. The trend is your friend until it ends. You have to trust the trend will remain intact until we see evidence that the trend is going to be exhausting or a trend breaks. So until then, expecting a continuation upwards. Let's dive down to an even smaller time frame. On the short term, we can see Bitcoin has seen a fair amount of volatility in that last 24 hours, breaking down, retesting our 69k support area, and again, we could potentially see a reversal toward the upside. If we do a short structural analysis, we can see we do have some sort of descending channel formation over here, a potential flag formation. We do have a equal downtrending parallel resistance, as we do have a equal downtrending parallel support that has been respected. Again, below this, we do have our POC level, our 69k level, and we do have a large amount of historical orders as per our VRPV on the higher time frame below 69,000, which you can see over here. So we have now retested an area of short-term and higher time frame support. If we do break out of this downtrend, we would be expecting a continuation back upwards to retest our local high points, which is going to be around about this range at around 71,200. This is going to be our short-term horizontal resistance. We can see numerous rejections from this level, and until we break above that level in the short term, we are not expecting a continuation upwards. We'd be expecting more chop sideways. If we do break out of that downtrend in the short term, we result in a continuation and break through a short-term resistance, we are almost guaranteed to continue up to 73 to 74,000, retesting zone 5 resistance. That is what we're watching out for. On the contrary, if we do lose our POC level on the short term, that could result in a continuation toward our lower level in our neutral zone at 66k. However, that is the unlikely scenario while we remain above our support levels. Let's go ahead now and discuss the implications of all of this on the higher time frame charts. So we're going to zoom over to Bitcoin's macro chart. We said in the prior video, and we've said a few times in today's video, that this is going to be one of the most important months for Bitcoin since November 2020. November 2020. And that is again because it's the first time we are potentially going to close a monthly candle over the prior all-time high on that monthly chart. And I talked about how we generally go parabolic when this occurs. Let's go ahead and show you guys. If we do a trend angle analysis from our lows to the point of that monthly candle break, and from that monthly candle break to the all-time high, we can see that the velocity, the strength, okay, the momentum, the volume, the demand overall significantly increases, as that is a reflection again of a steeper trend. We can see the trend angle increases from 39 to 73 degrees, from 39 to 52 degrees. This signifies that upon the break of the prior all-time high, we see a notable shift in higher time frame strength and demand, which results in the trend picking up. Okay, whether it be in speed, whether it be in volume, whether it be in aggressiveness, we generally see an explosion in price action which lasts around 8 to 10 months. So we do take a measured move analysis of this, a date range analysis. We generally see around 8, okay, to around 12 months. It's actually this bar over here, 8 to 12 months. So in the next 8 to 12 months from that monthly candle close, we are expecting us to enter that parabolic phase of the bull run, assuming that happens in March. 8 to 12 months takes us to November, okay, to March. November 2024 to March 2025 for a possible top for Bitcoin based on the date range trend. Very, very interesting stuff to watch out for if that develops. So we are definitely expecting, again, historical data has shown us that when we break above this level, we see a strong bullish reaction that lasts 8 to 12 months. That will give us a projected top of November to March 2025. Something to watch out for. Now, there is another thing, guys. If we take a look at our RSI, we'll go ahead and bring up our divergence indicator over here, which is going to be our RSI. Let's just go ahead and adjust some of this really quickly. Just delete everything on here so we have a standard RSI. We can see on the RSI, we take a look at a specific point, which is going to be the 80 point on the RSI. We'll go ahead and draw in the 80 point. We can see that every single time we break above, okay, the monthly prior high. So the monthly prior high is here. The RSI break is going to be corresponding with this point. We see a top for the RSI in again, 8, 2, we'll see, okay, breakout over here. We drag that to the top. We can see 12. Okay, we break out over here, we drag that to the top, we can see 10, so we have 8 to 12 months again. Just as we had 8 to 12 months from the breakout of the price structure to the top, we can see a similar pattern has occurred on the price charts over here. 8 to 12 months. So now if we apply this and we take the highest, okay, which is going to be 12, and we take the lowest, which is going to be 7, and I average that out, that is around 10 months. Applying that forward, okay, we look over here, we apply that forward, 10 months, okay, minus the 3 of the smallest, that gives us a 7-month range, which is around about, let's go ahead and average it out. So if we're applying, assuming we break out on March, 7 months from March is October, then we have November, December, January, and then we have 2 months from there, April, so this is going to take us to March, April. So it's telling us again from January to March, we could see the momentum flip negative, which could indicate a top could be in for Bitcoin around about that latest March, earliest January kind of area. So all of the ways we look at it, whether we're looking from a structural, whether we're looking from a date range trend, when we're looking from a momentum perspective, it's all signaling around about that November to March, but more closer to March to November for a possible top for Bitcoin. So again, this is all hypothetical, it is all speculative, no one really knows what's going to happen. There are a lot of economic drivers that could push the price action up for longer. There are also economic drivers that could start a earlier top in Bitcoin than what is projected by this data here, which we don't know of yet. All we do know is that, again, what drives price action on the macro mostly comes down to perceived systematic risk, and we do know the overall market risk and perceived systematic risk is decreasing as we move into a period of expected rate cuts. So provided we have economic narrative, we have social narrative that is resulting in the risk in the market reducing, we're expecting the macro trend to continue until those narratives start to flip. Remember, when you look at the macro price action, it doesn't really matter what is happening in the short term. You have to zoom out and ask yourself, are the narratives that have been driving the price action up this entire time. And those narratives have been present, okay? Of the narratives that have been driving the price action up this entire time. We've got ETF narrative, okay? We most importantly have potential reduction on interest rates narratives, okay? Are these narratives still intact? If the answer is yes, we expect the price action to continue in that trajectory for another few months, or until those narratives start to crumble or shift. It is only when those narratives shift that the market reacts. Remember, the market is future seeing. If we get indications that interest rates are not going to reduce in the future, the market is future seeing. It acts on perceived systematic risks. It is going to start correcting in anticipation of those events. Provided we don't have any future bearish events and we have more future bullish events, we could potentially see the trend continue, which we are seeing and we have been seeing for many, many months now. So a lot of people have been bearish in 15,000, 16,000. They don't understand the concept of future seeing markets. They don't understand how markets moved based on perceived systematic risk, and they don't understand how to formulate or how to calculate what perceived systematic risk really actually is. So we'll leave it there, guys. Hope you enjoyed today's video. If you've got any questions, leave them down below, and we'll catch you guys in the one tomorrow. See you then. Cheers.